Well, good evening, everyone. Hey, it's Shooter Scott Henderson. Of course, at the end of our presentation, please do review our disclosures. We're going to go over swing trade notes here. Short week, so we got a short list. So let's jump right into it. Okay, we're going over the June 30th through July 3rd swing trade notes. And last week's recap, a couple things we just added. I wanted to just give us a better visual. You know, what I'm trying to get to is where you guys look at this over the weekend or before Monday's open, and it gives you all the information you need to take a look at your next week. That really is my game plan with swing trade notes. Let's just jump into it. We also added a weekend heat map for crypto. It sort of gives us an idea here. Now, the one thing I'd like to point out is crypto is acting to me like it wants to be back in the spotlight. Bitcoin. Some news came across on XRP that I can't remember the senator, but he was talking about how it's going to be connected to the banking sector. And, obviously, you have all this FOMO going out there. You got people calling for $1,000 to $10,000. Well, hey, guys, let me just be straight up. XRP goes to $10,000. I'm retiring. That's exactly how it's going to happen. All right, so let me just jump into this. I mean, we had a decent week last week, booked a little more than $10 a contract. In the notes, I break down of what we opened, what we closed. Earnings is sort of light, so I'm just going to leave that for your review if you want to. The only thing is BNED, but I did not like the options. And Lou, I did not like the options either. So if it's too thin, it doesn't motivate. So now we break down the equities playbook, give us a visual of what happened. Really simple. We're running that tight map. If you guys haven't seen Shooter's SPY plan that I post every day on Twitter and in our main chat room for Rare, that is a good parameter for what's going to go into the market, because basically says, A, we go here, this is our target. B, we go here, this is our target. And I give a visual of what the wave counts might look like from there. And, I'm pretty much on with I have an A, B, and C option. A has been pretty accurate. 3 to 5 days a week, A is right. Once in a while, we get a C. Not very often, because usually that's the opposite in direction from the flow. But really high conviction flow. We're still chasing AMD, Tesla, Nvidia, and Meta. It's really hard to chase. I mean, I looked at them inside and out. Now, Hood, Tesla, Wolf, PLTR, and TSM have some huge flow. Let's look at the top swing trades. Honestly, it was a very hard weekend to find anything. I looked at a gazillion names, and I went to some sources. Usually my first 3 sources give me some solid setup. It hits my conditions, I'm good. I flagged 10 or 15 of them, and I pick the best out of the 10 or 15 and go from there. Then run a couple backup scans, and we're good. This week, I went out in the backyard, actually dug in the pile of leaves to find some green ones. So now, one thing this is a short week. So, the reality is we really don't want to put too much on, but we want to put on sort of conservative. I like American Express. There was a number of tape here as well that looked good. Citi looked good too. Same exact layout. But what I really liked here was the premium on the July cash secured puts, roughly 400 a contract, for less than 30 days. I was good with that. That was a good number. And there's little risk there. Running at about a 317 price right now, we got plenty of room with those 305. So, I don't think they get taken out. If you go back and look at the chart, we're in pretty good shape, right where we are. The only thing is I don't want to do August. I don't want to do time here. The reason is because this looks physical flag. So that means we're going to come up here, probably reject price a little. So I didn't want to go too deep. Now realize this is a monthly chart, so I gave you a huge time frame. But there was a reason I did that. It's because I want you to structurally see this flag. So after this trade, we get a pullback and we put in a higher low. We can do this again, rinse and repeat. This is one of those trades that I was talking about, you guys and gals who work for a living and don't have time to swing trade. This is the kind of trade that you can go in and you put in a good to cancel order for your cash secured puts, right? Those entries, especially in something like Fidelity or Interactive Brokers, TradeStation even. But I think this is a great trade for those folks who work for a living and don't have a lot of time to swing. And bottom line, these expire worthless. You don't have to worry about touching them anyway. So all you need is an alert or set a good to cancel order in when it breaks 293 in price. So now let's go to our next victim that's here, Grab. I don't really like the name, but we have 38,000 open contracts for the July $5. That got my interest. But you know what? I look for multiple reasons why I like something. I want the technical count, the wave structure, functionally, the mound structure here. Beautiful thing. Oh, that's a beautiful thing. You know, we're building out. We're expanding. Notice how shallow our push one, which is drive one, by the way. So this is our impulse leg. This is our corrective leg, right? We get a shallower shelf, right? Retrace. And then we have a huge push, rejected price, came back in for our back test, and then we broke down. So this is our corrective leg. And this is an impulse corrective leg. Basically gave it back. We had a reversion to the mean. With expansion behind that, those are potentially squeezed. So this has a shot up at $8. I like that. However, I had a hard time structuring the trade because a lot of the premium in the strikes outside those $5, they were either had 50% spreads or there was no open position. So I didn't want. So ultimately, I like buying common shares and selling the January $5 calls for 77. Gives you 20% upside for 6 months, a little bit more than a 40% annualized. It's not a big name. It's a good place to sit, I think, with the way that chart looks in this environment. And you never know, it might get bought and we might be looking at $8 and then you're trying to figure out how to keep those shares, structurally. Which I break it down. Now here, one caveat, you could roll out and buy the July $5 calls, right? And it's only going to cost you probably about $170 a contract. So you eat into your premium a little bit. So, but at the same time, it might be worth doing, all right? However, I think the upside, if it goes to 7 there, is, you turned a 20% gain into a 40% gain buying just a small piece of stuff. All right, now, next victim is HNGE. Now, this is a FOMO trade. This is a lotto. I'm telling you straight up front, okay? This is an AI stock chart, FOMO, caught a bid, lots of huge flows, options are open. This thing measures, based on my mound structure here, really up to $67. Now, if this catches the flow this week, because everybody's looking for the AI trade, we're going to know before the open, because it's probably going to be $3 to $5 higher than this right at the open. So I like selling the July 45 cash secured put, or just in the money. You have to sort of think about this, but I think it's got a shot at $100 with a FOMO behind it. So more aggressive position is, buy a call spread July 45, 65. What I don't like, and this is Sentinel, he likes those spreads, man, because of he does. Or she, it, or whatever it is. He likes those spreads. I don't. Requires too much work to manage it, but some of you have requested them, so we're putting it in. So I look at those 65 as risky if we hold about $75. Then you're going to eat $10 a share. So I don't like that. That's a risk I don't like it. So max gain is about 1150, roughly a 3.3 to 1 on the upside with the bull call spread. Decent. I'd rather it be 5, put on that kind of risk, but getting a 4 to 1 ratio on risk is not necessarily the high thing. So the next conviction trade is buy the $50 calls. Now I prefer the $60. Now, I would be more inclined to take a piece of the cash secured put and buy the $60 calls because you got less money out of pocket. You're only pulling in, $110 per contract on the put, and you're spending $6 on the $50 calls you're buying into money. But you have less premium out per share. If it pulls back, you're going to have less exposure, and But if it tanks and goes below the, and then one thing about a lotto and public offering kind of trade is they can go against you pretty quick. So you want to think about position size. So I kind of like the risk max with the cash secured puts, and then put a caveat in there. But if you want to put some insurance on, you can also buy some like $35 put for July because it's going to be over with in July. If this does exactly what every other AI stock runs to the frickin' moon, and then it gives it all back. The idea is if we get up to $70, you close the cash secured puts for a gain, right? You start scaling out of your calls. You leave the puts there, right? Take about 3 to 5% from what your gain was. Start adding back to those puts, right? And when it turns, or if it does turn around, because it could still hold price, and just because A, B, and C, D, E, F, and G AI stock did a reversion to the mean doesn't mean this one's going to do it with the type of market that we're in. And I break this down, where your risk, how to manage it a little bit, a little structurally managing the trade, what to do in each circumstance, trying to give you a little more detail. You guys like the new write-ups that I'm doing, so I went a little bit more into it. I apologize for not getting everything. I do have 2 more names that'll end up in chat after the opening range. My grandbabies came by and we had some dinner, so I got distracted. Plus, it was like really hard to find it. And I'm very serious. I went in the backyard and shuffled around the leaves and trying to find some green leaves. That was my day. So, well, at this point, folks, that's what I've got for this evening. Great trading. Until next time.